Welcome back. As promised, let's get that conversation going with Vikas Khemani, founder of Carnelian Capital Advisors. Vikas, thank you for joining in. Good morning to you. Have to start with what else but IT. So we've heard from three of the big giants now. What is your sense on where we are in this IT cycle? Clearly, companies are still very, very cautious. The numbers aren't really, blowing through the roof. How are you positioned on the sector?
Yeah, IT is a sector we've been positive for quite some time. Of course, we were very positive in 21 and then we reduced our weight significantly. So we are in some funds a little bit underweight, some funds I think in sort of equal weight, but we've been more focusing at a company level. We've been very bullish on mid-cap IT, and that is where the growth continues to remain very robust. Even if you look at for the large cap, what is important to see the kind of deal wins they have had. Two names have come out. HCL Tech had announced almost, I think, $3.9 billion. Infosys had announced 7 plus billion dollar kind of deal wins. So those are, one big indication of how the demand environment is there. The guidance for the current year can, they have guided a little bit down from the top end of the guidance, but I think companies will grow reasonably well. But 25 growth for 25 perspective, 26 perspective, I think growth is 10 to 15% kind of growth is doable. So this is with that kind of large base. So I think to my mind, deal wins shows the traction in the demand side. And stocks have corrected. So not really very bearish, but at the same time, this is going to be a very stable,
Sure.
sort of 10 to 15%, 18% kind of return kind of story, depending on when you buy and how you catch. But,
okay, so Vikas, just allow me to come in over there. Sorry, just coming in. Because you made that point that till now in your portfolios, you've liked to own more of mid-cap IT. So I don't know if you can share names or not, but give us some sense of what kind of mid-cap IT companies are you looking at? I mean, some of these companies like KPIT, etc., the stocks have done phenomenally well. So when you're looking to buy any fresh IT concept, any fresh IT theme now, what kind of companies are you looking for?
Within IT also, we've been very, very positive on the ER&D space. So companies which have a large exposure from ER&D space. So Cyient has been one of the pick in that, which kind of sits both in AR&D as well as, aviation growth. We've been looking at some of the product-focused company, which has been kind of doing well. So, or, IT companies where there's accelerated growth driver for one or the other reasons. So again, things can vary company to company. But what I was trying to say, there's a salience in the demand, and some companies might grow slowly based on because of the large base. But if you are able to find out companies which can grow 20% plus, which I think we've been able to do, most of our IT stocks this year has done phenomenally well. They are up between 60 to 80%. So I think, we will continue to look for those things. We are not bearish on IT in general because there's a tailwind of the demand.
I remember towards the end of September, Carnelian Capital had also acquired some stake in Quick Heal. That's the security company. It had come up in the block deals. Vikas, want to talk a bit about PSU Banks. I remember from our past conversations that you've been bullish on PSU Banks. Now, particularly on State Bank of India, where do you stand? So today we've got that UBS note, I'm sure you would have read it, where they are flagging off the asset quality risk from unsecured loans. And even for State Bank of India, the unsecured credit card loan book has actually gone up quite substantially as a percentage of its overall portfolio. And plus, there is that risk of NIM compression. Where do you stand on State Bank of India? And do you think there is this big risk, asset quality risk from unsecured book?
You see, historically, PSU Banks as a pack had three bigger concerns, asset quality, governance, and technology. And, if you see all three things in last couple of years have changed dramatically for all PSU banks or most PSU banks. Somebody like State Bank of India or Bank of Baroda were slightly early in that game, and they were able to. That's the reason if you see, both stocks have got re-rated a little bit more than the rest of the pack and delivered better returns. Some of the others are kind of doing now. But the fundamental point I'm making is that all these banks are now not suffering from these three things, especially the technology one, where most large PSU banks have invested significant amount of money into technology. So you are able to deliver the same service, whether it is account opening, you can do through the technology. You don't need to go with the form which earlier they used to go, and they have a very large footprint, right? So I see, and most PSU banks will be reporting 18 to 20% kind of ROE in next 1 or 2 years. So there is no reason why that bank, with these kind of changes, banks should trade at these kind of valuations. I feel the market share loss which they had earlier will get arrested. So we like the whole pack. Coming to your asset quality issue on the unsecured loan side, see, I think the way the assessment of the risk has undergone a significant change. Most banks have been doing through digital with the CIBIL score and a lot of inputs which has been taken before giving that. So while one should not be close towards the risk at all, you should always be watching out. But I don't see major systemic risk coming from there at this point in time. Because of the CIBIL infrastructure, most borrowers are very, very conscious about defaulting in that because that can impact the future borrowability. And this technology-led digital lending stack which we have is going to help us having limited asset quality issues on any of these lendings.
Okay, got that. That is on the banking space. Vikas, you want to take us through any other new ideas that you have or any stocks that really stand out to you in this market? Because we've seen quite a run up in these smaller pockets. So is there anything that stands out and that you think even at these levels would be fair to get into?
I mean, I wouldn't make any comment on the stock specific, but in general, we are able to find ideas in the market. There are pockets of exuberance, and one has to avoid that. But we are able to find ideas which are within our risk reward comfort zone. Pharma is another space which we think one should start looking at from next 5-7 year perspective. There's a very big change happening in the international market, which was a big pain point over last 5-7 years. Because of that, pharma stocks did not deliver. So I think that's the space which is, I think, getting into a good trajectory if you look at over the next 5-7 years. I'm not making any short-term comment, but you will see good risk reward, and there is a good risk reward. Even I would say consumer stock, pharma stocks are better placed than consumer stock from a risk reward perspective, as they are reasonably valued and better growth profiles.
All right, Vikas, we're going to leave it on that note, but thank you for, as always, for joining us, taking us through all of these ideas and your outlook on the market. It is time for a short break, but on the other side, we're going to